If you're wondering how you need to trade in this market, then you have come to the right place. You have found Riz International, and this is our market recap webinar that we do for all of our elite members here at Riz International. And man, has it been a week. That is for sure. Lots and lots of stuff happening this week. Of course, earnings season kicking off in full. Some big names like Google, Apple, Amazon, all those good ones. Netflix, of course, also reported, and a lot going on. And then, of course, there was the GDP numbers and the inflation prints. And look at what happened Friday. You know, it was a really interesting week, honestly, looking at the behavior of the market. We started here, on Monday, and it looked like we were stuck between this 4,300 and this 4,200 level pretty much all week until we hit Friday. And that's when the GDP numbers came out, and it all just went south after that. So huge sell-off. There was some fight here in 4,200 like we've seen in the past, but it just simply was not enough. And we have breached support here at 4,200, and we are on our way to 41, and that is definitely an area that we are going to be keeping an eye on. And listen, I understand that this looks really bad, but understand that we've been here before. I mean, it was just a few months ago, back in the end of February, where we actually got down to, let's see, 41.14 on the S&P 500. We didn't actually get that low on Friday. So what I'm trying to say is we've been here before and we've bounced. So obviously, this bearish move through 4,200 was not something that we wanted to see, but I think it was something that a lot of people had expected for quite some time. Friday, we had a negative 3.63 move in the market. And as Riz stated, and I'll read some of this for our people who are not in elite, because I think this is really good information that you guys should know. We had negative 3.63% loss on Friday in one of the largest single day sell-offs in recent history. That's for sure. We're now currently negative 14% from all-time highs. And 41 and 4,000 are going to be our next support levels that we're going to be keeping an eye on. And it's one of those things where we kind of needed this to happen. We had the negative GDP growth, rising inflation rates, rising interest rates. And of course, things just feel overvalued, for the most part. A lot of stocks feel really bloated right now. And this is one of those things where it just kind of needed to happen. For lack of a better term. This is how you buy low and sell high. I think this is the one thing that people forget, is to be able to buy low, that means that the market has to go down at some point. The market cannot just constantly go up all the time. I know it would be easy, where you could just throw a dart at a dartboard that had a bunch of stock tickers on it and pick whichever one that the dart landed on, and you would just know that it would go up all the time. That would make things really flippin' easy. But the markets are a little bit more tricky than that, and these types of sell-offs need to happen. And there was a lot of stuff going on, guys. There's a lot of outside factors pushing the market down right now that are not completely unexpected. And it's one of those things where we just kind of need to get through it. We would prefer to have a clean push down, kind of like we had back in 2020. Let's look at it here. These were a difficult couple of weeks. I'm not going to lie. I remember going through this with you guys through the virus. If I say the word, it will be flagged on YouTube. But you all know what I'm talking about, what happened here when the market took this dip. And it was just easier to just get it done, because then we got into the recovery. And it's a lot. I understand that when you look at it in a, if we just look at this, you're like, oh my gosh, the market is tanking. It looks terrible. Things are bad. But it's one of those things, we needed to have this sell-off. And if it goes further down, then it goes further down. We'll be keeping an eye on it. We'll be watching it for sure. And you should too, because that's part of learning how to trade, is understanding how the markets behave in different with different things happening. And obviously there are a lot of things happening right now. Of course, conflicts in Eastern Europe are still ongoing, and with the President of the United States pledging another $33 billion, if I'm not mistaken, that was the number, to the Ukrainian defense and initiative, we'll call it that. That's a big thing. A lot of people view that as escalation. There's a lot of, rhetoric coming out from both sides at this point that will affect the market. The market will digest that. And these things need to happen. But what you need to keep in mind is this is probably one of the biggest buying opportunities that we have had since 2020. So there are a lot of things that have been really beat down. Obviously, Amazon got hammered. Let's take a look at that. They got absolutely wrecked on earnings. I mean, that's a beating for Amazon. And I understand, listen, guys, this is out of my price range. I'll tell you right now, I cannot even buy one share of Amazon. But, for those of you that can, this is a fantastic flipping price to buy Amazon at. Considering where we've been at in the past. Netflix got pretty wrecked, if I'm not mistaken. Yeah, there's still a huge sell-off here on Netflix. They got destroyed. Apple did okay. Didn't get hammered as bad as I would say. This sell-off here is mostly because of what happened in the market. So yeah, earnings for Apple were not as bad as some of the other ones, but those were kind of the big notable names that I remember, coming up in the chat. And Google was the other one. I even mentioned that beforehand. So yeah, Google earnings weren't so hot. In the red there, though, Google's kind of hanging out here in this area. Again, these are excellent prices to be purchasing these securities at. Now, I'm not recommending that you go out and buy these. We don't have a position, in an official position, I should say, at Riz Elite, and I'm not giving you financial advice, but I'm just saying that if you want to buy low and sell high, now is the time. This is really good, and we kind of need to have this sort of thing happen so you can get in at these prices. Otherwise, it's just going to go up and up and up, and you'll basically be priced out of the market. So what I'm trying to get at is don't be scared. I understand that, right now there's a lot probably in your account that you're holding on to that's in the red, and every day you see the P&L get lower and lower. You see bigger and bigger negative numbers on there, and it freaks you out. But trust me, we had that back in 2020, and if you had held through 2020, look at that recovery that we had. I mean, just insane. Let's measure that, shall we? I know I won't be able to get it perfect, but let's just go from there to there. There you go, 118-ish% over about 2 years, over a full 2-year recovery. That's pretty good ROI. I don't know about you guys, but I would be okay with 118% on my portfolio over 2 years. So, guys, this is something that you got to understand that sometimes these sell-offs are required. Sometimes we have to hold through the pain. We have to tough it out and, just stay strong even through these sell-offs, because it gives us opportunities to get in things at cheaper prices like we had back in 2020. Let's take a look at the breakdown here. The S&P 500 utilities is starting to come back in, getting close to the zero line. Energy still sky high. I'm sure all of you are seeing that at the pump. I know I am. Gas is back up to $4 a gallon here. Living where I'm at. Let me put my phone on silent. Sorry about that. And then everything else is below the zero line at this point. S&P 500 represented here by the SPY ETF, down almost 13% or over 13%, I should say, on the year. Tech getting absolutely hammered. We've seen that, all year with growth stocks being just absolutely wrecked. A lot of those are technology based, getting hit pretty hard, almost 19.5% in the negative. And it's one of those things. We've got a market that's down right now, and we have to expect that a lot of things are going to be down. Like I said, the one thing that's not down is the price of oil. That, of course, we're all seeing right now. I think that we're all experiencing that lovely, price at the pump. But do remember that oil is on a downtrend here. So I'll be interested to see what happens here over the next couple days, if oil continues this downtrend or if we push through this and we start making some newer highs. Now, of course, As far as my pocketbook is concerned, I would like oil to continue to go down, and I would like the price, at the gas tank to go down as well. However, 93.75 has been holding pretty solid as support here, and we've come down, we've tested that, looks like 2 times, and we have not been able to breach it. So I think as hostilities continue in Eastern Europe, I also heard that Russia is now suspending deliveries to places in Poland, if I'm not mistaken, basically weaponizing petroleum-based products. And so this is something that we'll be keeping an eye on. From what I understand, there have not been any new talks about increased drilling or output as far as things here in North America, but we'll have to wait and see if that changes in the future. Speaking of another hedge on the market that really isn't a hedge anymore, remember when we talked about how sometimes gold just likes to come out of the channel for a little bit and then comes right back into the channel? I feel like I mentioned that last week when we were talking about this, and that's exactly what has happened here with gold. If we just back this out a little bit, I can show you a couple times. Of course, this is one time. Here's another couple times where gold is just like, let's just go up a little higher, and then it comes back down in. And then it goes a little higher, comes back down in. And then it just stays there. You'll notice that this is over a year's worth of data here on gold. And this channel seems to be really solid for gold right now. It does not want to come out of it. Even if it does for a couple days, obviously it just comes back home and gets back in its channel and does its thing. We're not taking any positions in gold right now, and not really something that we recommend either, because there's really just not that much movement going on. Taking a look at Bitcoin and cryptocurrency here, Bitcoin has been farting around with this 40,000 level and just cannot seem to hold over it for any appreciable amount of time since about January of this year. So really not much going on, all things considered. With everything else going on, I'm surprised there hasn't been more movement in cryptocurrency, but yeah, it's really just kind of hanging around this 40 area, kind of bouncing above, bouncing below, and that's about it. We have not, pushed back to the nice all-time highs of 69,000, but we'll have to see if that, we can get there at some point. I think that Bitcoin definitely can. When is a good question. But for now, Bitcoin pretty much just holding steady and just kind of chilling here around this 40 area and doesn't seem to want to bust out of it. Kind of similar to gold in some ways, but obviously not. And with everything going on in the market, you'll notice that we've not taken any long positions in quite some time. I believe we got into UPS last week. I know Riz shorted Tesla. Held onto that for only a few days. I believe he got in on the 26th. And he was able to capitalize on this sell-off here on Tesla. Of course, this sell-off primarily based on the purchase of Twitter by Elon Musk. What will often happen with acquisitions like this, let's go over to Twitter. Okay, so I guess the sale hasn't been finalized yet based on what I'm seeing here on the volumes and things of that nature. But of course, there's a lot of opinions going around on the internet. We're not going to talk about that. But typically what happens when you have one company acquire another company is investors will see that as money leaving the company. So the company has less value after an acquisition has occurred. And so typically you'll see a sell-off from the company that did the acquiring. Once a company is acquired, it's typically acquired at a certain stock price, and you will see the price jump to that level, and it will stay there all day. You'll see tons of shares being traded because of the acquisition going on, but the price will not move because that's the agreed upon contract price for the company, and those shares are being acquired at that price, and it just kind of sits there all day. But yeah, we did short Tesla. I understand many people do not have the ability to short because you have to have margin to do that, and also, of course, shorting is very scary for some. For me as a former day trader, it's no different than taking a long position, but I understand the concern about shorting, and there's always, of course, people have the ethical question about shorting. I personally have no problems with it. I think if we have that vehicle to make money in the market, we might as well use it to our advantage as much as possible. But yeah, short on Tesla worked very nice. I believe Riz said that he was looking to potentially get back in this, not making a formal trade announcement, but was just kind of keeping an eye on that. Because of everything going on, of course, surrounding Elon Musk and the acquisition of Twitter. Again, we're not going to discuss the political aspects surrounding that acquisition because it's not for this webinar. If you want to know my position on it, you can private message me in Discord, and I'll be more than happy to discuss it with you. But I want to go ahead and open it up to questions now for everybody here who's live on the webinar. If you guys have something you want me to take a look at, or you want to discuss things going on with the market, more than happy to talk about that. But yeah, I think really the key message, while everybody's typing, the key message I want to convey to you is just to stand as firm as you can right now. I understand where you're coming from. You see your portfolio going lower and lower, and you think it's all over, right? The market is going to zero, and it's all over. My portfolio is going to die. It's not going to die. You're not going to blow up your portfolio, and unless you panic and you sell, you have not lost any money. Now, some people might be asking, well, should we average down in this environment? And I think the thing right now is to kind of hold steady because we don't know where the bottom is. Now, you can average down on some of your solid blue chip stock companies. I have no problem with that. Would not recommend averaging down on bullshit companies. Pardon my French, but it's one of those things that if you're in solid companies, you have nothing to be worried about. It may take some time for that recovery to happen, but when it does, it will be very strong. And I can promise you it's going to be really, really good. Larice says, thinking of buying Amazon and Microsoft, but I'm tired of buying the dip. I get it, Larice, but I mean, that's kind of what we're here for, isn't it? Buying the dip. So let's take a look at Amazon and Microsoft. We looked at Amazon earlier, got absolutely wrecked on earnings. Let's see what the numbers were here. Yeah, that was a bit of a beating as far as that's concerned, but still a cool $116 billion in revenue, only missed by $6 million. What a tragedy. So, Amazon not going anywhere, I can pretty much, promise you on that. They lost billions on their Rivian stake. Well, we've been pretty vocal on our disdain for that company. So, maybe they should have listened to webinar. That's all I'm going to say. Pretty sure Bezos is not listening to webinar, but if he would have, perhaps he would have gotten more sound trading advice than jumping in on those Rivian electric vehicles. But we'll have to wait and see how that goes for them. But yeah, Amazon, again, really, really solid company. You're not going to have any problem holding this long term. And I can promise you we will get back to these levels eventually. When the market starts to turn around, we should see a turnaround in Amazon. Let's take a look at Microsoft. Microsoft, not too bad. On a pretty big downtrend. I would be more inclined to go with Amazon over Microsoft because of the potential for semiconductor shortages. Of course, there's a lot of concern about potentially flaring up of activities in the South China Sea surrounding that island out there that starts with a T. Again, we'll get flagged if I mention these things. Thanks, YouTube. But we don't want to upset the YouTube overlords. So we got to make sure that we're being careful with those types of things. But yes, with that sort of thing going on there's of course the potential for a semiconductor shortage. We're already in a semiconductor shortage, and that would just make it worse. So I would be a little cautious with Microsoft. I will say it's pretty solid here in this 270 area. Would be pretty happy getting an entry around there. It looks like that support has held pretty well. Earnings look like they went well as also. Yep, we had a nice little beat. Not too much, but a little bit. Only doing half the business that Amazon's doing. Just a cool $49 billion. Microsoft, again, another great company. Let's see what that dividend looking like. 62 cents per share. Nothing to shake a stick at. That is set to come on the 18th of May. So just a couple weeks. I understand the hesitancy on buying the dip. And, maybe, Larice, for these companies, maybe it is a good idea just to hold out for a little bit. You could wait and see how the market behaves. If we have more of a down week next week, then you'll be happy that you waited. And you can look to eye a even better entry than you would have jumping in here. The flip side of that coin is it's a temporary market turnaround and we start bouncing now, and then you're kicking yourself for not getting in. So it's really a tough call as far as which one you want to do. And yes, Yas, we'll look at that in just a second. But I agree that maybe a starter position might be warranted. Just take a small position so you're in, so you have at least a little bit of skin in the game. And then if it continues to sell off, again, both of these companies I would have no problem buying more on. I think you'd be just fine. All right, Yas wants to look at AbbVie. I see. Well, that's a nice little bounce off the 100 moving average there. That's a lot of support down there for AbbVie. So it looks like earnings, what did they miss on? Okay, so we didn't hit revenue. If I had to guess based on this move with a beat on EPS, it's probably outlook, or the guidance, excuse me, was probably not the best. I don't know the earnings report on this one. But really nice support there. They really held over that 140 area, and the moving average held as well. I like this one. This looks pretty solid to me. Dividends $1.40. That's not bad either. You'll have to wait a little while to claim that because that'll be happening in here somewhere. Could be a pretty nice entry on AbbVie here. Really nice hit off support there, and really respecting the moving average. I definitely like that, even though they did miss on revenue a little bit. I like it. I think it looks pretty good. Wants to have some guidance on how to manage your position on oil and gas. Riz doesn't have any formal holdings in oil and gas at the moment. That is correct. Gene, which tickers are you in? And we can look at them specifically. Or do you just want me to talk about oil in general? Okay, sure, no problem. Like I mentioned with oil earlier, we are in a bit of a downtrend here, but honestly, I kind of expect that oil is going to continue towards the upside, if you ask me. I don't see any type of de-escalation happening in Eastern Europe, and of course, Vladimir Putin is not entirely to blame for the current price of oil, and I'm not going to sit here and say that, that's it because, all of this happened before any conflict happened. So, I'm not going to sit here and toe the current administration's line as far as that is concerned. But I will say that the price of oil is going up, and I think it will continue. I don't see any reason why we wouldn't push higher at this point. Now, of course, there are some indicators and some concern about, once oil gets to a certain price, the economy can't handle it. We'll have to see if that's the case, but I think if hostilities continue, and if there are no, appreciable gains made as far as peace talks are concerned, my opinion, I'm pretty bullish on oil. I actually told Riz that I was bullish on oil, and I think I called it like right around, it was on 420 because it was that day, of course. Honestly, it would have been a pretty decent entry. It wasn't perfect, but we would be up at this point. So, am I expecting a big move based on the price action? It's getting narrower. Yeah, right now I'm not seeing a whole lot of volume here. We're not getting these huge volume spikes like we did here when the conflict began. I think, honestly, the big decision is going to be whether Europe and NATO decides to put an embargo on Russian oil. I think that will definitely give us a big move if that happens. And with the election of President Macron in France, then I think that is a much larger possibility than it would have been if Le Pen got in. So I personally am pretty bullish on oil right now. I expect a larger move to be happening here within the next month or so. So long as you're not in a leveraged, like ETF or something like that, I think you should be totally fine holding for a bit. I understand the price action has gotten a little bit tighter here over the last couple days, but I think that's kind of a wait and see what the EU is going to do. Really, wait and see what NATO is going to do, and just keeping an eye on it. But in my opinion, I'm pretty bullish on oil right now. If I had the ability to do so, I would be taking, long oil stuff, along those lines, because I pretty feel with the entire energy crisis going on, especially in Europe, even if you have to hold it for a little bit, I'm pretty sure you're going to get that move later this year, if not sooner rather than later. Of course, if there's any type of announcement as far as further engagement or things along those lines, then you could definitely see a big move in oil at that point. But if things just kind of stay status quo, then it may take a little bit longer to get there. But like I said, I would be totally fine holding oil and gas right now. I think it's a pretty solid investment. That's my opinion, at least. Take it for what it is, But yeah, I think that everybody's kind of waiting and seeing what NATO is going to do, and then I think we'll see a bigger move as far as oil and gas is concerned. But yeah, that is that. And so again, guys, of course, be patient, hang tough. I understand that right now it's very difficult to deal with all that red in your portfolio, but don't worry. We just need to ride out this storm. And so that's my recommendation as a whole for everything going on. Hang tight, hold on tight. And, for all of our members here in Riz Elite, of course, you guys are going to be getting the most up-to-date information. And for those of you who are not in Riz Elite, it's just a couple days away. Star Wars Day approaches May the 4th, and we are going to be opening up registration to new members. So if you want to be part of this, if you want to get all of that up-to-date information and, Riz's insight, I suspect he will be back on webinar next week. And we are really looking forward to meeting all of our new members because we want you to join us, be part of this family, and get everything you need to be successful as a trader in the market. So until next week, we will see you. Hope you have a great weekend and just take some time off, relax. Don't look at your portfolio. Don't look at the charts. Just leave them be. And we will catch you in Discord on Monday.